Hello futurists, welcome to my YouTube channel where I track the acceleration of intelligence that will inevitably help us build a brain. In today's video, we'll be looking at alt data and how it's changing finance. Here is what the video will cover. Chapter 1. Back to basics. What is alt data? Chapter 2. The risks and rewards of alternative data for investment decisions. Chapter 3. MetaQuant approach. Chapter 4. The future of alternative data. With the advent of artificial intelligence, AI, and its impact in capital markets, the analysis of traditional data, such as historical publicly reported revenues, fundamental, technical, and economic indicators, seems to be no longer enough. Over the next 5 years, alternative data will most certainly disrupt active investment management, from hedge fund management to long-only mutual funds and possibly private equity managers. Firms that do not update their investing procedures within that time frame may incur strategic risks, and rivals that successfully incorporate alternative data into their securities validation and trading signal systems may be outmaneuvered. Investment management companies will most likely employ news feeds, social media, online communities, communications metadata, satellite imagery, and geographical information, to mention a few datasets, to supplement their traditional methods for securities validation as the rule rather than the exception in the near future. These methods may enhance the accuracy of their estimations or just increase the speed with which they are generated. But change is inevitable, and some innovators appear to be embracing it already. These datasets are instances of alternative data, which include any alternative dataset used to inform investment choices. The application of this data is known as dark analytics. Most investment management organizations now rely on structured datasets obtained from a variety of sources. This data is compiled and fed into proprietary quantitative models. The appeal of alternative datasets stems mostly from the possibility of gaining an information advantage over the market while making financial decisions. True information advantage has existed throughout the history of securities markets at various periods, and alternate data appears to be the most recent incarnation. Consider the fortunes gained when the carrier pigeon was employed to acquire an information edge efficiently. Rather like the winged messengers back in the day, today's fortunes may be based on the accessibility of massive amounts of data combined with smart analytics that drive the possibility for the information advantage. With the application of sophisticated analytics, speed and knowledge are increasing, and there will be no more waiting for late adapters or turning back. Strategic risks impact negatively on a company's competitive edge. They put the rational logic of priorities in risk, jeopardize the company's long-standing competitive position, and jeopardize exceptional performance. The incapacity of a company to recognize, analyze, manage, and respond to strategic risks can have a negative impact on its vital assets, financial performance, and reputation. From organized to unstructured data sources, investment management companies can employ a range of alternative data to assist trading decisions. Speeches, news articles, television, press releases, presentations, websites, online traffic, Internet of Things, private databases, and government datasets can all be used to obtain this information. Advanced analytical approaches such as machine learning and cognitive computing are the finest ways to take use of alternative data. Large, diverse, and unstructured data volumes may be processed at a breakneck speed using such modern technology. The development of sophisticated computers that could quickly assess financial news, social media attitudes, and business interviews, as well as an explosion of data created via social media platforms, drove the use of alternative data to a considerable extent. Hedge funds were among the first to implement alternate data methodologies. Alternative data has gained traction in recent years as a means of gaining an information advantage in the market, although the desire for such an advantage is as old as the market itself. Satellite imaging analysis of parking lots is a well-known use of alternative data, which is replacing the old-school technique of manual foot traffic counts with clickers. Even though the datasets were tracking identical consumer actions, alternative data techniques are faster and more thorough than physical counts in this scenario, resulting in an information advantage over the old-school approach. Chapter 1. Back to basics. What is alt data? Historically, in almost any field, there is apparently a holy grail. In finance, it is the quest for novel sources of information as a way of gaining an advantage over competitors, called alternative data or alt data. As alt data continues to enter the mainstream, becoming an essential part of portfolio construction, investment professionals, hedge funds, and asset managers have begun to conceive it as the most precious resource, changing the capital markets landscape forever. Of course, those who do not follow this seismic shift and update their investment processes accordingly face an increasing risk of lagging behind. However, finding an edge does not only depend on the quantity of data, but also on the ability to combine data sources that otherwise seem unrelated, and encompassing data to extract insights from non-financial and non-traditional sources to improve alpha generation. Defined as any information collected from non-traditional sources used for a different purpose than the one initially intended, most conceive alt data as a niche of unstructured, unorthodox data not previously used in the investment process. For others, alt data is simply any information that is non-market data. But the definition is much broader and clearly brings us closer to visualizing a wider field of effective action to create better predictive models. Chapter 2. The risks and rewards of alternative data for investment decisions. When it comes to investment selection, early adopters of specific alternative datasets may have a competitive edge. According to several data providers, some of the early alternative datasets are now less strong in their capacity to assist alpha creation. This category might include unstructured data acquired from earnings conference calls. This lessened impact is most likely due to data proliferation, which reduces the data's information advantage. Estimating the risk and reward equation for alternative data appears to be more difficult than for other types. The risk may be bigger, but the rewards may be greater as well. In today's markets, information advantage might be difficult to come by, and any advantage, even a little time advantage, can lead to a more effective trading signal, algorithm, or investment model. Alternative data usage is relevant to active strategies, and it may provide actively managed portfolios a significant advantage over passively managed portfolios, which do not have a method to include alternative data at the moment. The fundamental driver of alternative data adoption is information advantage. Alternative data are being used to support this purpose, whether it be outperformance versus peers or benchmarks. Portfolio managers will likely have to go through a lot of ideas to locate the ones that actually add to the models that support their investment choices if they want to get an information edge using alternative data. Many signs, once recognized, may not remain over time or under changing market conditions. To verify the value of the novel strategy, standard approaches such as running parallel models, one with alternative data and one without, can be utilized. Standard historical data sets may simply not exist, which is one of the issues peculiar to alternative data. Consider the ratio of favorable to bad comments on social media as a ticker, as well as the comment growth trend. Firms that rigidly follow a policy requiring 5 years of backtesting before using other datasets may miss out on the most valuable times of alternative datasets before proliferation decay sets in. Some companies will certainly achieve greater results with alternative data due to talent and culture than others. Firms may need to develop both novel investment ideas and alternative datasets on a frequent basis to maintain their performance and gain a competitive advantage. The creative inquiry will be driven by people, while technology will collect, process, and test the ideas. Effective use of alternative data necessitates organizational commitment and availability to specialized personnel, a combination that may be more difficult to obtain in bigger or risk-averse businesses. Using alternative data to continuously improve on established ways would almost certainly need continued ingenuity. Chapter 3: MetaQuant Approach. Talent, alternative data, the conception of hybrid forms such as the quantamental and the MetaQuant have become key factors in a search for unexplored sources of alpha. How do we develop a comprehensible model with the most groundbreaking strategies based on machine learning and AI that allows investors to reap greater gains than other market participants? In this chapter, we rethink the core value proposition of alternative data and why a MetaQuant approach is a meaningful advantage to investors, enabling a deeper understanding and correlation of all the sources that could improve the appraisal of alternative data as a key engine for innovation in the arms race for an edge. Because of the diversity and high volume of alt datasets, a new issue has arisen: how alt data is characterized to determine which one is most valuable according to the organization's needs. In this respect, there is not a unified or formal criterion to discriminate between conventional or unconventional alt data. No matter how alt data is classified, though, the truth is that market participants must think about reliability, accessibility, cost-effectiveness, and redefining market players, aka the MetaQuant approach. Are traditional data science teams good enough to develop models able to achieve long-lasting competitive edge? Not quite. The complexity of incorporating unstructured data into the portfolio construction process makes it necessary to create a new profile of quants. This is called the MetaQuant approach. MetaQuant is a new breed of market player who is able to translate human language into signals and read the data from a holistic perspective. They are linguists, semiologists, and philosophers, or rather, a combination of these three intertwined profiles, who will fuel the potential for information advantage and provide a unique core differentiator, transforming data into knowledge in the financial world. The MetaQuant has emerged as a crucial component of any AI quantitative trading model and paves the way for a novel insight: the reinterpretation of alternative data. It is in this scenario where the combination of structured and unstructured data using AI technology in a big data environment has a hidden value. In the common quantamental process, advanced computational techniques are used extensively to reduce bias and random noise in investing. The MetaQuant takes this thinking out of the box, addressing crucial financial questions from a more descriptive, qualitative level, integrating the unstructured with existing models or creating a differentiated model. The MetaQuant, based on a holistic approach, explores unstructured data within a specific context, disclosing in-depth combinations of multiple factors from a variety of datasets, providing valuable insights that are not so visible to the naked eye. Once the corpora, that is, unstructured and alt data, has been exhaustively analyzed, the MetaQuant will design an integrated framework with variables defining all the possible relationships. For instance, finding patterns, extrapolating and identifying phrases highlighted in an earnings conference call associated with geodata or even market drivers, which will be modeled by sophisticated AI algorithms, fueling and enriching the portfolio selection and its rebalancing while assigning a predictive value or score to each asset allocated by the portfolio manager. With a hybrid model, portfolio managers will have at their disposal not only an incredible wealth of data and disruptive analytics tools, but also potentially new distinctive and actionable insights in the search for an edge. The landscape of data is ever-changing, and as a consequence, market participants need to evolve to stay ahead in order to gain a unique competitive advantage and boost profits. This is just one piece in the mosaic of the financial puzzle. While still in its early days, alt data is a revolutionary step towards bringing transparency into capital markets and global economies. The MetaQuant is certainly the figure turning over the most rocks at an infinitely greater scale, critically questioning every stage of the model, monitoring and revisiting the interactive framework that give investors an edge. Chapter 4: The Future of Alternative Data. The signs for future use of alternative data to aid in the generation of alpha are mixed. According to research on investment managers' acceptance of alternative data, the question to ask isn't whether alternative data will become mainstream, but how soon is still up in the air. According to IDC data and forecasts, most areas of alternative data use are growing at a constant or modest rate, with some cognitive technologies seeing extraordinary development. Vendors in the alternative data arena report rising interest in their services from new types of clients, including early adopters and even those organizations that are typical of the early majority in terms of risk acceptability and organizational complexity. Interviews with alternative data providers indicate that the technology has reached a tipping point, with accelerated expansion as indicated by the adoption curve benchmark. While there are obviously hazards in adding alternative data into investment decision-making processes, there may also be strategic risks in doing so. With advancements in advanced data analytics and an increase in the availability of data to examine, the stage appears to be set for IM firms to use alternative data to enhance their decision-making processes. Within the next 5 years, we should expect alternative data to spread fast from the early adopters sector and into the early majority segment. The demand for professional data analysts in finance isn't going anywhere, even with well-structured feeds and benchmarked datasets. Quants incorporate alternative data into models alongside terabytes of traditional data, while fundamental businesses use it to better evaluate their current investing theories. That is, alternate data will always be a component rather than the entire dish. That's also why some experts disagree with the notion that a broadly spread data collection inevitably indicates lower alpha, especially if it's non-aggregated. Given the same raw dataset to 20 different funds and analysts, they'll come up with 20 different strategies to profit from it. Gene Exter, CEO of Alternative Data Group and an alternative data professor at New York University, said, "There will be no alpha decay in that sense." Erez Katz, co-founder and CEO of Neurovest, echoed this sentiment, emphasizing the importance of subject matter knowledge and creative thinking. You need individuals with excellent analytical abilities, but you also need people who understand Wall Street, what it takes to move markets, and how to get over the limitations of crowd knowledge. Thank you for watching. If you enjoyed the video, hit like, and if you want more content like this, subscribe to the channel. Make today a great day. Until next time, keep thinking.